Hey, what's up guys, John here. 54,000 home buyers canceled their contract to purchase their dream home in October alone.
According to the National Association of Realtors, sales down 14.6% year over year.
This is the highest on record in American history, according to Redfin. You have to ask yourself why. Well, something very big is happening in the housing market and in the economy nobody's really talking about. But home builders know. And what home builders are doing to capitalize on this massive shift tells us everything that we need to know about where we're headed in this real estate market in 2024, 2025. I'm going to break it down for you. I'm going to show you exactly what they're doing. It's unbelievable. Please hit the like button. When you hit the like button, YouTube will share this content to educate more people about what's happening in America and our housing market. And if you like to fix your credit to position yourself for what I think is going to be the greatest investing opportunity of all time, we'd love to help fix your credit at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So, Redfin. Roughly 54,000 U.S. home purchases were canceled in October as buyers backed out due to sticker shock or when sellers didn't meet the request. The cancellation rate could tick down this month as buyers take advantage of the decline in mortgage rates. Well, I believe most people understand the price point in which they're paying for their properties when they go under contract, but what they don't realize is possibly the insurance cost, the actual carrying cost of that asset. They realize, hey, you know what? It's a lot cheaper to rent right now. I'm probably better off waiting. I'm going to pull back a little bit. Maybe I have some down payment money. I can build up my reserves. I can put myself in a better position. If home prices drop, then I can go out there and buy then. But what they don't know is this. So, before I even get into that, national investor purchases plummeting. Look at this. Investors are scaling back on their purchases in the housing market at a record pace. Investor purchases dropped 29.7% year over year in Q3 2023 to 48,667. This is the lowest level of any third quarter since 2016. By comparison, overall U.S. home purchases fell 22.2% to 305,000, the lowest level in Q3 since 2012. Meanwhile, interest rates continue to rise and supply levels are 40% below the historic average. Housing market activity is coming to a halt, right? 168,000 views. Now, look at what's happening here. 45%, right? 45%. It's coming down, or investors are pulling back. But look at what is happening. It's 52% more expensive to buy than it is to rent in this housing market. 52%. Look at what developers are doing. So they're doing one of two things. This is the first, is they're building these tiny little homes. 350 square feet, basically the size of a garage, or a two-car garage, $100,000. And if you want to get the upgraded version, it's $131,000, right? So $131,000, this would be your payment, 8% interest rate, about $8,000 down, 6% down, about $1,200 a month. This with extremely low insurance and taxes. It's probably going to be more, probably around the $1,400, $1,500 per month carrying cost, in line with renting. But I believe many people are probably going to opt in to just say, you know what, I want to own something, and they're going to go out there and they're going to buy it. This is the type of environment we're in right now. The American dream is going through a big change here. So look at what home builders are doing. Old homes in the U.S. now cost just as much as new properties, but when you start to get into it, you'll see that buying an older home is probably going to cost 20, 25%, 30%, 50% more on a monthly payment basis than buying an existing home. It might sound far-fetched. Well, look at this. So, if you just look at Florida, for example, look at home inventory, by the way. June, July, August, September, October. Home inventory is increasing walking into the winter. When does that happen, right? Even on a national level, increasing as we're walking into the winter. Why? It's because home sellers realizing that the party is over and they want to get out before they can. Now, home builders they're about to unload a ton of inventory on the housing market that they need to sell. They need to find buyers for it. They thought they were, maybe 2021 when they started buying up all this land and develop these subdivisions and these lots, these neighborhoods, these communities, that they were going to have 3% mortgage rates and home buyers would be everywhere. Now, that's not the case. And they're getting ready to dump. Look at this. Overall, housing starts rose 1.9% to a rate of 1.372 million. units in October. Economists polled by Reuters had forecasts start slipping to a rate of 1.35 million units. Permits for future construction of single-family homes rose 0.5% to a rate of 968,000 units last month, the highest level since May of 2022. So, while home buyers are paying 8% mortgage rates, others are wrangling steep discounts and creating a surprising surge in new home sales. Now, these home builders are offering these teaser rates, 3 years, 5 years, they'll do it at 4% mortgage rate. So people are like, hey, I can go buy my dream home now. I know the Fed's going to pivot, maybe not now, maybe in a year, 2 years, 3 years, they're going to pivot for sure. I'll refinance then, at least I can get out of renting, I can buy this property. And maybe they're right, maybe, or maybe not, right? In this world, nothing is certain. You don't know what's going to happen. But look at this. Home buyers who don't have the luxury of remaining on the sidelines, waiting for interest rates to come down, or circumventing the challenge of high mortgage rates by offering incentives and interest rates in the 5 to 6% range, usually on limited properties. Builders have purchased a product that allows them to offer lower rates on some of their homes, like outstanding inventory. But the limited amount of funding available for a limited time, some big builders like D.R. Horton have lending subsidiaries that originate mortgages for new home buyers. Builders provided rate buydowns can be permanent or temporary, the latter resulting in teaser rates that could increase and result with increased payments. So we'll see if that happens. If they start moving into an arena where they just say, you know what, this is going to be a permanent, because this is what they're saying. They're saying, some of them could be permanent buydowns. If they start doing this, think about this. You're a home buyer. You're looking to buy a property, maybe a $500,000 to $600,000 home. And on a, let's just call it, on a $500,000 house, $500,000 home, and you're putting down 6%, you're looking at around $4,200 a month, right? $4,300 a month. Now, if that mortgage rate were to come to 5%, you go from $4,260, you basically save $1,000 a month. $1,000 a month. That's just on the payment. That's just on the payment. But what they don't tell you is that your insurance is actually cheaper to insure these properties as well. So the payment on a monthly basis based on your interest rate being greatly reduced, plus the insurance to insure these properties will be greatly reduced. So what's going to happen? You may see, sure, there's not that much inventory. A lot of people are saying there's no inventory. John, there's no inventory. Home builders are getting ready to unload about 1 million homes, right? They're getting ready to unload a ton of properties. And all they need to really bring to market is 100,000, 150,000 homes for a lot more inventory to come on the market. And there's not that many buyers out there looking to buy right now. Point blank, there's just not. Like they're even saying, CBS News, you want a lower mortgage rate? Look for new construction. Here, looking for a 4% mortgage? Here's where home buyers can find one. Where can they find one? Well, they can find it with consider Lennar, right? Effort to drum up sales. Austin, Texas, in early November, the builder was offering rates as low as 4.99% on a 30-year Federal Housing Administration home loan for buyers who get financing from the builder's affiliated mortgage company, Lennar Mortgage. In Orlando, Florida, the company was offering a adjustable rate mortgage with the rate as low as 3.99% in the first year. After that, the mortgage adjusts to prevailing rate, which could be as high as over 7%. Another home builder, another public traded home builder offering 30-year rates, 4.875%, some communities. You start to look at these numbers and it's like a lot of Americans have their net worth in their head. They think my home's worth $500,000, I owe $300,000, I'm worth $200,000 here. I have some stocks worth $100,000, I have a 401k, and they're adding everything up and they're saying, you know what, maybe I'm worth, hypothetically $500,000. But as their 401k goes through a change, the stock market goes through a change, and their property is, much more challenging to sell, they're questioning everything. They start to question their purchases. They start to question vacation. They start to question everything because their wealth, that perceived net worth that they had in their head, is slowly getting disintegrated, right? And so when we're looking at what's happening here, I believe we're going to be walking into a dynamic and a real estate environment where homeowners that have these beautiful properties that thought that they could just hold on to them forever, as the labor market starts changing, inflation continues to run rampant, taxes and insurance continue to rise, wages begin to soften, and everything starts to change, and people realize we're not going back to 2018, 2019. The world's probably going to get harder. homeowners might be looking at this real estate market with a different lens, right? And home builders are looking at this as a massive opportunity to undercut the entire real estate market. Step in there and really just offer a situation in which buyers are really looking for, which is a cheaper mortgage rate, a new home, less headache. Even though a lot of these newer homes, a lot of the materials are very low quality, there's a lot of bad new construction out there, no doubt about it. But the home buyers are just looking to get in. They're looking to buy a property with a lower interest rate. And when you start to see people, buying properties locking in 4.99% mortgage rates, it's pretty unbelievable. It's pretty unbelievable. They go on to say right here, when mortgage rates were 6%, buyers needed to make a little over $100,000 to cover the housing costs. Experts generally advise that buyers spend no more than 30% of their income on housing. With so many buyers priced out of the market, demand has fallen. For existing home sales have cratered. The pace of home sales in 2023 is expected to be the lowest point since the GFC, the Great Financial Crisis, 2008. What do you think about this situation? Drop below. I think we're going to see a massive opportunity to invest in real estate coming 2024 and 2025. I think it's going to be unreal. Let's have a conversation about it. If you'd like to fix your credit to position yourself for the greatest wealth transfer, I believe, in American history, we'd love to help fix your credit at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. I'll catch you in the next one.